Hi, I'm Randy Kirk, and over the last few days, I've been publishing a few videos that are dealing with Tesla catalysts. These are stock catalysts, things that are going to cause the stock to move when they are announced or when people become more aware that these situations exist that make Tesla worth more than the street, more than the combination of all Tesla stockholders are feeling that it's worth on any given day. These are catalysts that are going to move the stock. This is not investment advice. I'm not an investment advisor. As Stephen Mark Ryan likes to say, do your own homework. So I've talked about a couple of catalysts. I've talked about the energy storage catalyst. I think that's the biggest one. I think it's going to be huge. Yesterday, or last time I did this, I talked about the robot, the Optimus humanoid robot catalyst. There's this card in the corner for each of those, and take a look. It'll also, in the first one, on the energy storage one, it'll also talk more about what is a catalyst and why it's important in case that's some information that you need to have as well. So today I want to talk about yet another catalyst. This is one that you may find surprising. I certainly don't think that most people out there are paying any attention to this at all, but catalysts make a huge difference, and so I'm looking for them all over the place. You may be aware, if you follow Tesla closely, you are certainly aware that they have an insurance company. There have been people that have done some analysis. We did some analysis in our book, the Elon Musk mission, where we talked about what the value of this insurance company would be if it was a separate company. We talked about what the value of the insurance company will be in the future once they are getting large numbers of people to sign up. It's a massive potential company. As fast as they scale cars, and you have 2 million cars a year, and then 3 million cars a year, and then 5 million cars a year, and then 10 million cars a year, every year you're just adding to the potential base for the insurance company as well. And the insurance company should be wildly profitable because of the nature of how they've designed the insurance company, which is going to be more profitable than any other insurance company. We explain all that in the book. I'm not going to go into the details here. Right now, the street, the analysts, the pundits, nobody is valuing the insurance company at all with regard to the future of Tesla. If it was a separate company and somebody came out tomorrow and they said, hey, we are going to have an insurance company, we're going to call it only for Tesla insurance, and we're going to have all this data with regard to Tesla cars and the way they deal in accidents and the way that we judge whether people are driving their cars safely and whatnot. I'm not going to go deeply into this, but we have a very different way of looking at insurance with regard to automobile insurance, and it's specifically for Teslas. And here's what we think it's going to do. There would be a value. If they had an IPO, there would be people. If they had a private offering, there would be people lined up to buy this insurance company, and it would have a value. Let's say it's 10 billion, 20 billion, who knows, but it would be large. But right now it has no value because it's just one little division within a company that's primarily in the car business. What's going to be the catalyst? What will be the wake-up call to the street? What will be the wake-up call to the retail investors that will say, oh my gosh, this is a real thing? I have a really odd one this time. I'm sorry, this is very weird, but it's something to pay attention to. The state of California, which is Tesla's number one place where they sell cars by a lot, and also the fifth or fourth largest economy in the world, currently will not use Tesla's method of determining the cost of insurance for the user. They won't use the Tesla method. They still want Tesla to use the old style approach of how old is the driver, how many years they've been driving, how many accidents have they had, how many tickets have they had. They use all these kinds of methods for determining how much they're going to charge you for insurance. I have State Farm insurance on the Tesla, and it's $100 a month, which is it's a decent price. I'm not complaining about the price. But if Tesla was able to use their method of determining how much they charge for insurance in California, I'm thinking it would drop to $60. Why do I think that? Well, because Tesla uses five or six. There's a little confusion right now. They're using 6 on the app, but we're not sure they're using 6 for the insurance. But they use 5 or 6 different aspects of how you drive in order to determine what your rating will be, what amount you'll have to pay. And it can go up and down based on whether you improve your driving skill or whether you don't improve your driving skill. They don't care how long you've driven. They don't care if you're 16 or 76. They don't care if you've had tickets or accidents. And by the way, they don't care if you speed all the time. That's not one of the 5 or 6 safety elements that they've chosen. But the ones they've chosen, they know, are predictors of whether people are more likely to be in an accident. So my catalyst is when California agrees to use the safety score method for determining what Tesla charges for insurance in California. When that happens, all of those folks in California that currently own Teslas but are buying their insurance from somebody else because it's not cheaper to buy it from Tesla, when that happens, the street will wake up because a lot of people will switch and a lot of people will begin to purchase from Tesla, and a lot of other states will start to fall in line because California has fallen in line. When that happens, I think people will give some value. They may not value it as high as it could be if it were a separate company, but I believe that will be a catalyst, and it's one to keep your eye on. Once again, if you like this content, please like it. If you'd like to see more, please subscribe, and tell your friends. This is Randy Kirk. Enjoyed talking to you today.
Click the link below to get your paperback, Kindle, or audiobook now.